Audrey, who's here in the studio, and we'll be talking about non-performing loans. What is the way out, and how can we get the banks up on their feet without having to carry the weight of bad debt? Audrey, thank you for coming.
Yeah, thank you, Bolaji. It's always my pleasure to show up here.
Now we're seeing these figures coming out again, non-performing loans. We thought we were out of the woods, but somehow it seems that these things are coming up again.
Yeah, banks are financial institutions who are into lending, and therefore lending is a critical part of their business. And as long as you give loans, of course, you must have failures now and then, because lending is a very risky business, and risk assets are, the predominant part of a bank's total asset. And of course, that also, carries most of the risks in banking. And once you're lending, like I said before, you will have challenges with some of the loans. But the important thing is that every financial institution ought to curtail the level of delinquency in its loan portfolio as much as possible. Okay, there are several causes. Maybe before we start, I'd like to run down on a number of reasons why we have bad debt, especially in Nigeria. One, we have a very poor borrower attitude. When we're talking about this name and shame thing, okay, I just want to say that we have to be cautious in discussing the name and shame issue. In this name and shame game, you have some genuine, credible businessmen who actually, because of some other issues, economic issues and all of that, or business risk crystallizing, who have genuine problems in their businesses. And therefore, they have no capacity to repay, even though they may have the willingness to pay back. So that you have to differentiate them from some people who game the system, who are very bad borrowers, who have this very poor attitude that bank loans are ways of getting national cake or just live large on us. So you have to differentiate these people. So for those people who game the system, the name and shame thing can work in getting them to pay. While for genuine borrowers, you find that this actually likely to cause problems. So now we have borrowers' attitude. It's a very bad issue. People borrow in Nigeria without the intention to pay back. For them, that's their own way of getting a chunk of national cake. Secondly, we have a tough business environment in Nigeria. Macroeconomic issues, fiscal deficit in government, high interest rates, high energy costs. All of those, make business survival in Nigeria very tough. And we, of course, coupled with the tight monetary regime, which causes very high interest rates. So an ordinary businessman, average businessman in Nigeria, is moving, against a top hill. Is moving against big obstacle in the business, and you find that risks crystallize more often, in their attempt to make businesses work. So I talked about macroeconomic challenges. Very importantly, you also have lack of proper credit governance in many banks. I'm a trainer, and I am a credit analyst, and I have taught or trained so many banks in the past 1 year, among the top 10 banks, and you find that there is still need for banks to have a very proper credit governance system. Many banks don't have well-defined credit risk, what we call CPG, credit policy guide. What kind of loans can we go into? Which industries can we operate in? How much concentration can we allow? Where can we lend? When can we stop lending? How do we diversify our portfolio? And then, how do we lend? How do we get approval? Who can we lend to? How do we handle insider or director-related loans? These are issues in many banks. No clear credit policy guide. And again, let's look at lending scales. There's huge scales gap in many financial institutions. Thankfully enough, in the past 1 or 2 years, I've seen so many banks, I may not call names here, who have been ramping up.
Please don't call names.
I won't call names. But so many banks have been ramping up on their training of their staff. Some banks keep their staff in a room for almost 3 or 4 months trying to train them. So I expect to see an improvement in loan performance in Nigeria, because the way banks are training now, scales gap is being addressed. And the CIB and Chartered Institute of Bankers of Nigeria is also making sure that the competency level in banking is improved over time. So we expect to see an improving trend in scales gap or scales level in banking. There's also a big problem in the Nigerian banking system: the aggressive drive for profitability. And I have a big issue here. Despite the fact that the economy is having huge challenges, the expectation from banks, what we expect from banks, is still at the same level as though we never had financial crisis and so on. And many banks, because they have got on their high horses, don't want to step down. Banks that declared, let's say, 50 billion PBT, last year, and have progressed over the years, don't want to be reported to be said that they have a decline in their PBT, and that's a big problem. Because we have to begin to recalibrate our expectations from these banks to help them calm down their high horses. Even though the economy, of course, CBN is also trying to curtail some kinds of charges banks charge, meaning that a lot of earnings sources are going to begin to disappear. The COT, the Commission on Turnover, is almost gone. It's supposed to be 1 naira per mil. That's for 1,000 naira withdrawn. As of today, even though not many banks are keeping to that yet. But by next year, 2016, COT is meant to go completely. And this used to be a major way banks recoup costs and gain revenue in banking. So you find that so many other ways. Of course, the ATM charges went until the new CBN governor came and restored it. So many things are being put in place by CBN to ensure that banks begin to earn more money from real intervention in the economy. That's intermediation. So you find that the sources of earnings for banks are coming down. Unfortunately, no bank wants to tell the market, I'm not going to make as much as I've been making before, because they have got up there, and they must meet their targets. And you find that somehow careless lending comes into being because of this aggressive drive for profitability. CBN needs to address this issue. And all of us in the economy, the investors, shareholders, need to help the banks. Okay, Guy, I can understand that we cannot continue to earn the same dividend we used to earn. Okay, it's okay to have a 30%, 40% drop in your revenue or in PBT. We can live with that. We need to help these banks calm down their high horses.
Okay,
right.
I know that you have a lot more to.
I have 4 or 5 more factors I want to mention before we continue.
We'll come back to that, but I just want to ask you a question. You said that some members of the public have bad borrower's attitude. They just want to borrow without the intention of paying back.
Yeah.
Now, who should be responsible for that? Isn't there a way to track down these people,
that is
perhaps
the job.
looking at the credit history of such people,
in lending,
and see how to cut down or even deny such individuals of monies? Don't forget, they're all shareholders' funds, shareholders' monies that are being used to run the bank. So they should be protected.
There are 2 ways to look at it. One, these people who don't intend to pay their loans, who do they know in these banks? Are there insider, connections, connections, in the canons of credit? We usually have what we call 5 C's of credit. Now it has been expanded to 7. Some people even have 12. If you expand it to 7, people have what they call connection. Who does this person know in the bank? So that's a factor to it. Is it possible that these guys come through some, big boys in the banks, and they get these loans easily, and they forget to come back to pay their loans? Secondly, lending analysts ought to have a high emotional intelligence. When we conduct credit analysis programs, we now try to include a module on emotional intelligence for lenders. You ought to find a way beyond the credit bureau system and beyond other means of determining character, track record, credibility, banking records, and all of that. How can you, communicate with a borrower and be able to, gauge him emotionally and understand his level of credibility, honesty, transparency, and good intentions? You may not be, a soothsayer or look into the crystal balls, but when you give yourself enough time to study somebody and relate with him, and with a good level of emotional strength, you'll be able to tell yourself, this person cannot pay back.
Okay.
And when you have that gut feeling, please do not lend.
You said quite a lot, and I'm just trying to, I'm trying to catch up with you on all of the points you've raised. So talk about bad borrowers' attitude, risk management, proper credit governance. Maybe that should be the responsibility of the central bank.
No,
and the banks.
The board of
the
these
banks.
banks.
Okay.
And of course, the central bank has, the
oversight
function to visit these banks regularly to ensure that they do what they say that they do. And they have to actually say it in their credit policy guides. Any commercial bank or even for that matter, any non-bank financial institution that does not have a credit policy guide should be questioned by the Central Bank of Nigeria.
A credit policy guide.
A credit policy guide. They must have it. And that guide must be properly understood by every employee of that financial institution. Not just understood by them, even tested. I know 1 or 2 banks that test this guide. Everybody, no matter your level, well, except a few big boys, must get tested on how much they understand this guide. Because it contains the whole instructions, or the Bible, or the Holy Book.
The Constitution.
Constitution of how we lend.
Of lending with the banks.
Who we can lend to. how we can lend, where we can lend, how do we get approval, how do we ensure recovery, and all the whole gamut, end to end.
Okay.
You know.
I'm very curious, before you go on with the other points that you have to give to us in terms of why we're having this problem in the financial market, the banking sector, I'm very curious about so-called bank directors who come out to say, oh, I don't know that company in which I am, you know, my name has been penciled down to have borrowed from the banks. So I'm just wondering, is it that the banks did not do their due diligence in finding out who these people are before giving out millions and billions of naira in loans to?
Yeah.
Why would some individuals come to say, I don't work with that company, I'm not on the board of directors of these companies, so why should my name be released to the public and I'm now accused of owing such amounts of money?
Bolaji, when matters come to money, a lot of foreign issues come up. You know, during my banking career, in fact, I did a lot of bad loan recovery, you know, during my over 16 years of banking career. And I almost became an expert in loan recovery, all right? And I've entered the court several times, you know, in the Southeast and here and there. I've entered the court several times to defend my employer on issues of bad loans. And you enter a court, you know, a matter that ought to be in the undefended cost list. Of course, the customer will normally say all kinds of things. I didn't borrow from this customer. I had no such commitment with them. In fact, I woke up one morning, I saw this money in my account, and all of that will make those confusing statements. And that case will normally move from undefended cost list to a defended cost list. And you now start a long, tortuous journey, almost in perpetuity, of loan recovery. So I'm not surprised if people will say, I'm not a director, I'm not even owing the bank. These things are common. Many bad borrowers don't even own up. In fact, they will tell the court, because unfortunately, with all due respect to his lordships, not all judges are well trained in financial issues. Thanks again to CIBN, who are now taking it upon themselves to train judges every year. In fact, one of such events is coming up in a few days. Many judges don't know about financial matters. They don't understand the financial market. They don't understand how banks' books are kept. So when customers wake up to say, I'm not owing this bank, these figures are spurious,